everybody. Welcome. My name is Susie Seidelman. I'm the Environment Program Associate here at the Johnson Foundation at Wingspread. Unfortunately, Catherine Porter, who's the coordinator for the Water Funders Exploring Collaboration, has not been able to log in to join us. She's having a problem with the software for the webinar. She's listening to us right now, though, so let's send her lots of happy thoughts via our phone lines. And apologies, Catherine, that you can't join us. So I'm going to take over as the moderator of the beginning portion of this call. So I just want to run through the procedures very quickly. At any point during the call, you can submit a question, but please note that we're not going to actually take any questions for answering until the question and answer period at approximately 1:30 in today's webinar. However, you can direct your question to me, Susie Seidelman, using the chat feature of the GoToWebinar platform. And also, any comments or questions that are not related to the presentation can also be submitted to me, and I can direct those to the appropriate presenter. When you ask a question, please make sure that you let me know or let the presenter know if you're speaking the question during the Q&A period, specifically which presenter you'd like to have answer that question. During the question and answer period, if you could please use the tiny little hand icon, which is called the hand raise tool, that'll alert me that you would like to ask a question, and I'll make sure to call on you. And also, this webinar is going to be recorded, so a copy will be available for download on our website very shortly. So the objective of today's call is to build off of the August Wingspread meeting to come to an understanding of funder role in financing sustainable water infrastructure. So I'm just really quickly going to go through our agenda today. Me, serving as Catherine Porter, has just given you the welcome. And next we have Lynn Broaddus, the Director of Environment Program here at the Johnson Foundation at Wingspread, who's just going to give you a background briefing on that August Wingspread meeting. Up next is Betsy Otto, Vice President, Conservation at American Rivers, will be presenting a presentation on reframing the water infrastructure issue. After her will be Charlene Lurig, from the Senior Manager of the Insurance Program from Ceres, who's going to present on market obstacles and solutions. And then after that, David Rankin, Vice President and Director of Programs from the Great Lakes Protection Fund, and Scott Miller, Environmental Program Manager of the Russell Family Foundation, will co-facilitate some reflections and group discussions so that we can really get into some dialogue and have a real conversation on these issues. After that, they'll also facilitate a very brief next steps conversation, and then we will adjourn by 2:30 p.m. Central Time.
Glad to have you here. This is Lynn Broaddus from the Johnson Foundation at Wingspread, and I know most of you, not everybody, but most of you. And I'm sorry that Catherine isn't able is only able to listen. She probably feels like she's, I don't know, in some kind of torture chamber out there. But most of you know that the Johnson Foundation at Wingspread has been focusing on U.S. water issues for the last couple of years. And many of you have actually been to one of our Wingspread meetings as we pursue this endeavor. This particular effort that we're going to be talking about today and using as a launch pad for discussion was a conference that we had in August, Financing Sustainable Water Infrastructure. And we actually had a series of webinars leading up to this to get all the participants at least to some common level of knowledge. But that meeting and that pursuit was a direct outgrowth of our Freshwater Forum series in 2009 and then the release of Charting New Waters in 2010. And through those dialogues and the consensus process that we used in 2009 and 2010, there are a couple of things that we heard repeatedly, no matter whether we were looking at things through an agricultural lens or through a urban lens or through a public health lens or climate change, whatever. We heard, of course, that we have a water infrastructure that is beginning to fall apart, well into the, depending on where you live, well into the stages of falling apart. But as we rebuild that infrastructure, it's really important that we not just kind of go with status quo and rebuild it as we have it. We really need to think about that physical infrastructure to ensure that it's going to meet our future needs, as in using less energy, hopefully in parts of becoming energy neutral or energy generation, using less water, and creating fewer disruptions to the natural cycle of water and nutrients. But one of the other key messages was that the financial resources that our nation puts towards our water infrastructure whether that's user fees, tax receipts, private investments, federal subsidies and incentives, or even the sort of policies around our accounting rules. These are all part of the infrastructure as well, and that they need to be updated to better incentivize and support this new type of water infrastructure. We see this juncture of finances, accounting, and water as one of the mega challenges of our lifetime. It's been a privilege to work on this with American Rivers and Ceres. They've been incredible partners in this project to date, and we're hoping to stay engaged with this and continue to pursue as long as we feel like we seem to be adding value to the conversation. At this point, what I'd like to do is I'm going to turn it over to Betsy Otto, Vice President of Conservation at American Rivers. Betsy and Charlene are going to sort of take an overview of pretty much the content of the meeting, and then David and Scott will, who also participated in the meeting, will lead a conversation, more of the reflection part of the conversation here. So, Betsy, I'm handing it over to you.
Thanks very much, Lynn, and welcome to everybody on the call. I think I know many of you, if not most of you, and I think many of you are familiar with American Rivers, so I won't talk much about us as an organization, except to say that for the past 10 years, we have been very engaged on questions about how to increase overall investment in clean water infrastructure, and especially how to make the case for and figure out how to invest in more resilient, integrated, and sustainable systems. And I want to just say thank you very much to the Johnson Foundation for its continued commitment to this issue, for its support for this financing work. Because to my knowledge, our meeting in August had never really been done before, in the sense that we brought together a really unusual mix of experts in municipal finance, water resources management, utility executives, to look at the question, to consider how can we bring public funding and private capital together to achieve a more sustainable water future for the nation. Next slide. So what I wanted to do was just give a very quick overview, just touch on some of the freshwater challenges that we're dealing with, which we're all quite familiar with. Give a bit of an overview for what does it mean to have sustainable water infrastructure. What does that future look like? And last, to touch on some of the obstacles to financing for that sustainable water infrastructure future, and also then turn it to Charlene Lurig at Ceres, who will pick up that thread and talk about some of the opportunities and solutions that we discussed at Wingspread. Next slide, please. So, as I said, we're all familiar with the kinds of freshwater challenges that we face in this country, extinction rates with aquatic species that are 5 times greater than that for terrestrial species, huge numbers of physical alterations that continue, that have happened in our past, loss of wetlands, et cetera, dams, levees, floodplain management that's, sort of hardening these structures and taking away their natural function. Next slide. And over-withdrawal for systems, also climate change impacts, very significant impacts, particularly in the Intermountain West, in timing and amount and form of that precipitation. But next slide, we know that lots of regions are going to be experiencing, and already are, more intense droughts and more intense flooding, often in the same areas, even in the same year. We're going to be seeing more extreme storm events. The EPA estimates that in the Great Lakes region, for example, they forecast a 20 to 50% increase, greater incidence of sewer overflows into the Great Lakes due to storm intensity from climate change. Next slide. So we know that those are the kinds of things that we're challenged with. Many of you are funding efforts to address those, and that we have aging water infrastructure. 10 years ago, EPA estimated that by 2020, half of our pipes, sewer and water pipes, would be in really poor shape. We're losing 6 billion gallons of water every day to leaky pipes. That's 14% of the nation's daily average water use. And the U.S., on a per capita basis, uses more water than 30 of the world's most industrialized nations. Also has some of the lowest water rates, which we're going to be talking a bit more about later. Next slide. And so we really need to be moving toward a much more sustainable way of managing fresh water. And I put this slide up here about Singapore because it's a country that's very dependent on its northern neighbor, Malaysia, for almost half of its water imports for its fresh water. And they have begun a process to become much more self-sufficient, transforming their flood drainage system into essentially a national water cistern and open space system, which I think is the kind of thing that we're going to be seeing more and more cities, regions, and nations doing in the future. We know that what we've built in the past isn't going to meet our needs in the future. The kinds of 19th century and early 20th century solutions and structures just are not going to cut it in the future. What does that future look like? Next slide. We're going to be seeing a lot of changes, I think, or the need for moving, if we could move to the next slide, from an old model to what we see as a new reality. What we're already seeing as a new reality and what we're going to have to be planning for. Right now we manage water, drinking water, stormwater, wastewater in very separate silos. We need to integrate those. We need to apply the best water for the use. So it makes no sense for us to be using highly treated potable water to water lawns and for irrigation, for example. We need to be moving from a system that is based on certainty. So water systems now are designed looking backwards in the rearview mirror at historical trends, and we know that much of that is going to be out the window. We need to be designing systems that are very flexible and that can manage much wetter wets, drier dries, and everything in between. We designed a lot of our water systems to be centralized, and we in fact need to be moving to something that's much more flexible and efficient and decentralized, scalable site-level systems that can be taken up to the city level and managed across a decentralized array of infrastructure. We're moving away from the cheap energy and cheap water era to one where efficiency and reuse are going to be extremely important. Similarly, cheap money, if there ever was such a thing, is really going to be a thing of the past. Every dollar that we now apply, especially at the municipal level, has to provide multiple benefits. It's no longer enough to provide money for, let's say, an underground deep tunnel system to deal with stormwater when it's serving only a singular purpose. That money has to be applied in ways that actually build economic resilience, community livability. And on wastewater, there's a real movement to move away from just, sort of thinking about wastewater as something that we throw away and thinking about what we can recapture from it in terms of energy and nutrients and so on. Next slide. So what we talked about at Wingspread were a set of principles for what it means to manage water more sustainably. And these build from a lot of work that was done during the Charting New Waters initiative at Wingspread that were done several years ago by some of my colleagues and others from many organizations at the Aspen Institute. And there's a kind of growing drumbeat of interest in applying these kinds of principles, which are very different than the way we've built systems in the past. And I'm not going to go through in detail all of these points. A lot of these will look familiar to you, but just touch on the high points. We need systems that are more adaptable, as I said, that are more flexible to meet the kinds of future conditions and the swings in those conditions that we're going to be dealing with. We need to be planning and implementing these systems at a watershed scale to think not just about the downstream end or the end of the pipe, but the entire system that's feeding into our water, the entire water resource system that's feeding into our water infrastructure systems. We need to be thinking about natural capital, the natural infrastructure systems, the forests, the floodplains that are providing functions, and we need to be protecting and restoring those functions as one of the most efficient, cheapest ways of providing fresh, clean water. As I said, we're going to need to move to a more decentralized approach, more distributed green infrastructure that's replicating natural hydrology even within very built-up cities. And we need to move to the notion of one water, integrating drinking water, wastewater, stormwater, and fitting the best water to the use. Investing much more in resource efficiency, so optimizing conservation and efficiency investments before we go build new water treatment supplies, new reservoirs. Next slide. Some of the other principles are looking, as I said, at applying every dollar to provide multiple benefits. And then we start to get into some of the principles that really very directly relate. These all relate, but these very directly relate to the financing questions. We need to be pricing water differently. Right now in many systems we're not even covering the full cost of service, much less the total cost to meet these kinds of sustainability requirements and principles. Nor are we really doing full life cycle planning, management, and accounting for the total cost of these systems over their lifespan. And those elements all need to be better captured in our pricing and our rates. We need to be doing a much better job of asset management overall, providing best industry practices, not just the ones that are currently recognized as best industry, but the ones that are at the leading edge internationally on how we manage water systems, how we extend the life of our existing built infrastructure, and how we do good operations and maintenance to extend the operational life of those systems. And then we get into some questions around governance, too. We have governing boards, city councils, public utility commissions, other special utility boards that are not necessarily set up to govern these more integrated one water kinds of systems, and those will present challenges for us as well. Next slide, please. So, this is just a nice graphic of the notion of siloed water infrastructures. And then the next slide gives a point that I think was very interesting as well, and I'll just mention it here in passing because it relates to financing and sustainable management. And this was a point that was made in one of our webinars that preceded our Wingspread convening. Chuck Clark, the former head of Seattle Public Utilities, noted that all of those dashed lines represent demand forecasts that were made at various points in time in Seattle, all of which proved to be wrong, all of which proved to be much higher than what the demand for water actually was. And that was a result of many investments that the city made in conservation and efficiency. In some cases, it was the result of economic downturns, but in general, it shows that it's very difficult to accurately forecast demand, and that we tend almost always to shoot high and to put a lot of money and investment in new supply, when in fact some of the most important investment is in efficiency, reuse, using every drop of water that we have more efficiently. Next slide, please. And so what I wanted to just conclude my remarks with were some of the points that came out of our discussion at Wingspread, some of the obstacles to financing sustainable water infrastructure, and then I'll turn it over to Charlene to talk about some others. The first relates to this silo question. So we've got segregated financing. We've got utilities, in many cases, wastewater or sewage utilities that are completely separate from water utilities, have totally different accounting, different books, different governing boards. And that makes it very challenging to start to think about sustaining a more sustainable water infrastructure and financing. We have the declining use paradox, and that is what I just showed you in the Seattle Public Utility graph, that by investments in conservation and more closed loop systems that are being built, these are systems which at the building or at the sort of neighborhood scale are designed to take in a certain volume of initial potable water and then reuse it many times over through treatment plants in the basement many times of these buildings, so that that water can be reused for HVAC cooling, for toilet flushing, etc. And the result of that is that they're drawing less water from the drinking water system, and they're putting less wastewater into the sewage system, and all of that adds up to declining revenues. A real challenge with the way that we're currently structuring pricing and rates for a lot of these utilities, which gets to the third point as well as the full life cycle cost question. And then the last 2 points I want to make are that we discussed at Wingspread are the whole natural capital or ecosystem services arena, which there's a lot of really interesting work happening right now, but still relatively little real progress in putting natural infrastructure and ecosystem service value on the books, on the balance sheets of utilities, though these are extremely valuable. And if the true value of those services were put on balance sheets, it would actually help with debt coverage ratios and some of the pressure that a lot of these utilities are feeling, and would provide incentives to do more investment in ecosystem services and in natural systems. And then the last point is funding for what? The question of, we want to bring more private capital as well as more public capital to our freshwater needs. We know we need to bring more investment to this arena. But to fund what? And I want to end with an anecdote. Right after the Wingspread convening, I met with folks from M3 Capital in Chicago. And this is a firm that does a lot of advising to pension funds. They're very interested, as their clients are, in doing much more investment in the water sector. They see it as generally safe and a good return on their investment. But what they told me was that no investment under 25 or 50 million interests them. And what they're particularly interested in is the old school technology, the standard treatment plant or desalination plant, because they understand it, because they think of it as, good solid investment. And so I think therein lies a real challenge as we bring more private capital to this sector. We want to make sure that it's actually being invested in more sustainable, kinds of strategies and solutions. And the last thing I want to say before I turn this over to Charlene, I'm sorry I've gone on a little long, is that I'm going to be moving to World Resources Institute from American Rivers in early December to run WRI's Aqueduct Water Stress Project. And I'm going to stay very involved in this financing work because it's near and dear to my heart. And my colleague Jeff Odefee, who's on this call and who leads American Rivers Green Infrastructure Economics work, will be taking the lead on this work going forward for American Rivers. So thanks very much. And with that, I will turn it over to Charlene Lurig from Ceres.
Thanks, Betsy, and thanks to the Johnson Foundation for enabling this conversation. I'm going to talk a little bit about the obstacles in the market that our participants at Wingspread identified, and then some of the solutions that they identified as well. For those of you who don't know much about Ceres, we are a national network of investors who work to engage the people who manage their assets and the companies that they invest in, along with policymakers around emerging risks, including climate change and water scarcity. We have about 100 investors with around $10 trillion in assets under management. And that group of investors in recent years has turned to water both as an emerging risk that affects the value of the companies that they own, but also poses a real opportunity to invest in solutions. And Betsy touched on that a little bit as well, and I think that that is an incredibly important perspective to consider this through, especially if we go to the next slide, when we think about the role that private capital investment capital plays in developing our water infrastructure. In the United States, the vast majority of the water systems that we have in place today are financed by investors through the public finance market, through the municipal bond market in particular. And while we have a legacy of these very large conveyance projects and reservoirs that were built by money from the Bureau of Reclamation or other federal sources, as we move into the future, the amount of federal money that's going to be put toward those sorts of resources will be absolutely minute compared to the amount of money that will be provided through the finance markets. And so for that reason, the expectations that investors bring to what water infrastructure looks like and what sort of rate of return it should provide is absolutely critical to reshaping our water infrastructure in the vision that you heard about from Betsy and Lynn. So what are the sort of elements of investor expectations that are so important in shaping that market? Well, the first is that the municipal bond sector, which is about a $3 trillion market that is the primary way in which capital gets directed to our water infrastructure, for very many years was seen as pretty much the sleepiest sector around. Water systems were, and to a large extent today, are considered by investors to be monopolistic enterprises, to be essential service providers, meaning that people can't just stop using water, they have to use water, and so that means there's a steady cash flow there. In reality, that world that water utilities operate in is changing, and it's changing in ways that Betsy just talked about. This sort of assumptions around whether or not they're monopolies or even essential is changing because of the disruptive technologies that are entering the space. The closed-loop water filtration systems that Betsy spoke about actually are reshaping the sector, although investors don't recognize it today. Part of the challenge is also that most investors, while they're very comfortable with the way that dams and reservoirs and traditional water treatment plants work, know very little about these emerging technologies and also approaches to incorporating natural assets into infrastructure portfolios. And that also presents challenges when you're trying to find a competitive rate of capital on the market if you're a water utility. The third challenge is as more private capital in the form of private equity enters into the water sector in the U.S., it means that there are changing expectations about the rate of return that investors will receive from that. The municipal bond market expects a fairly low rate of return because it's a tax-advantaged market. So investors are happy to get a 4 to 6% yield on a very long-term investment, a 30-year bond. The more that private equity starts to play a role in the sector, the more that rate of return will move toward the double digits. And that has very significant implications for the people who rely on water systems to get affordable water. I said earlier that the sector is seen as being a very sleepy one. Well, that kind of goes hand in hand with this next point that was recognized by our participants, which is that this is a very data-poor market. There isn't a lot of efficient integration of good information into the market itself. And what that means is that rating agencies and investors have very little information to work from to differentiate between a system that's really very high performance, that's looking at the resource intensity of the service it's providing, that's looking at a variety of different scenarios in terms of demand in the future and building their capital improvement plans around those different scenarios so that they have financial flexibility. There's just very little information that's provided in a way that actually shapes pricing in the market in terms of the cost of capital that water utilities see when they're building their systems. And it means that there's no real risk signal and there's no real incentive right now in the market as it exists today to move toward the sort of practices that Betsy's talking about if you're looking at it from the perspective of the capital markets. Can we go on to the next slide? So beyond just those sorts of dynamics, there's another one that's playing out that is especially pernicious for the managers of water utilities, and that's the ability to secure sufficient revenue streams. No matter, one of the key takeaways from our participants is that no matter what the financing tools are that you use to build a system and maintain it, no matter if it's municipal bonds or private equity or anything in between, you have to have a way of paying that back over time. And in order to pay it back, you have to have sufficient rates that reflect the actual cost of delivering water. I think this is absolutely staggering. This was something that was shared by the director of the American Water Works Association who participated in this process. On average, an American household pays about $1 a day to have 3/4 tons of water delivered to their house. There is no other commodity, there is no other good that you can imagine where you could wake up every morning and get 3/4 tons of something and expect to pay $1 a day. So why is it that we pay so little? It's good to have water affordable, but if it doesn't actually reflect the true cost of delivering that service, there is a problem sooner or later. One of the reasons that we pay so little is because federal subsidies that built things like the Salt River Project, the Central Arizona Project, the State Water Project in California, and even some of the water treatment plants that we have in response to the Clean Water Act actually helps to keep those water rates very affordable for a long time. But part of the challenge also is that many utilities, because people have an expectation of paying very little for water, defer maintenance. They defer replacing those pipes or putting into place new treatment facilities until crisis strikes, until there's a major water main break or something else happens. There's a consent decree handed down by the EPA. And then they go into reactive mode. And what that means is that ratepayers ultimately can end up paying much more for water than they would have had we actually gone through this approach of understanding what the full cost of that water is and actually charging rates accordingly so we can maintain those systems over time. The other problem here is that that very low marginal cost for water encourages really high consumptive behavior, which then puts utilities in the position of having to raise even more capital to build very capital-intensive supply projects. And that becomes an even more intense credit degradation cycle if you end up having demand fall below what's forecasted in the sort of dynamic that Betsy talked about. That creates real credit problems. And we know all of this is underpinned by real political resistance to increasing the rates that people pay for what's seen as being a really fundamental service. So no matter what, these are dynamics that we have to address if we're going to find ways of financing it, because we need to make sure we have enough money to pay back whatever the financing vehicle it is that allowed us to build this new water infrastructure. We go to the next slide. Another one of the challenges that we face is that the sort of existing market structure and tools we have, like the municipal bond market, works really well if utilities are putting in place a portfolio of assets that they own and manage directly. But if you're the city of Philadelphia and you want to approach stormwater management through putting in an integrated system or distributed system of green roofs and green spaces to treat that stormwater in a distributed way, and you're working with property owners to do that, that presents challenges if you want to use those same sorts of market tools to finance. And it means we might have to look at new sorts of investment vehicles if we're actually going to build that infrastructure at scale, especially when we consider the amount of debt burden that many of these systems face from their legacy systems. Next slide. So I'll just touch really briefly on some points that Scott and David will talk about later. And these were the opportunities for driving change that were recognized by our participants. First and foremost among them is being able to change the assumptions that city councils and public utility commissions bring to these discussions about rate increases when utilities try to raise rates to enable them to transition to these more sustainable sorts of systems. There is a real need for utility managers to be able to bring good data about dynamics around demand management and changing demand patterns, the need for full cost pricing to those rate discussions so that they have the force of the entire sector and best practice across the whole country behind them when they're making those arguments. There's also a real need to increase the use of performance data, both on the side of utility managers who are managing these systems, who right now don't necessarily have access to good information to benchmark themselves against others, but also for investors as well. And our participants recognize that there could be value of applying something like a LEED rating standard to water utilities. That could also create more information flows that can be used by rating agencies and others in the disclosure process, the financial disclosure process and credit assessment process, to actually shape how cost of capital is influenced by these performance metrics. There also is a recognition that there needs to be a better vision of where the sector is headed, this 21st century water utility. There's a need for a shared vision of what that means. And especially as part of that, not just what that built system looks like or how natural assets fit into it, but also how we need to move away from a volumetric approach to pricing these services so that we're not so dependent on people consuming more and more water. There also was a recognition that sometimes the impediments to actually integrating these systems is one that's posed by regulatory barriers. And so there's a need to educate regulators about the impediments that they might be able to help remove so that utilities can actually become consolidated in a more efficient way that actually treats that water as all resources, no matter whether it's drinking water input or wastewater that could be used for other purposes in the future. Next slide. There also was a recognition that if we are to tap into more private capital, there might be a real opportunity if we also recognize that part of the challenge for our water systems is just how energy intensive they are. And in fact, that energy intensity and the real energy gains that we could get by investing in energy efficiency might actually open that up to a class of investors who already are participating in energy investments, but just not looking at the water sector as a way of doing that. There were also participants who, coming from some of the largest utilities in the country, San Francisco Public Utility Commission and others, said that they think it's incredibly important to be able to engage the people who set standards around valuing the natural assets that these utilities rely upon to deliver services for free effectively, so that the assets that they're able to reflect in their financials actually show that those natural assets do actually have value. That's not something that they're able to do today. And there is a need going forward to educate and effectively lobby the accounting standards boards to allow them to reflect that on their balance sheets. There also is a need to somehow provide capital, whether it's patient capital, or whatever form it is, into local ecosystem service preservation and restoration projects that can be hopefully brought to scale, incorporated into capital improvement plans, and financed through our traditional markets as well. And then finally, the last point is that yes, ratepayers and regulators need to be educated more about the value of the services that utilities are providing and the need to increase rates or adapt them to reflect the value of those services. But there's also a need for utilities to understand what their customers value. Because this was a monopolistic sector, because they were providing an essential service, they didn't necessarily have to know what their customers valued and how to communicate that in a way that allowed them to still secure that price in the market. And those things are changing. It means that there really needs to be more resources available to utilities to know how to do that. So I'll conclude there and pass things off to David Rankin from the Great Lakes Protection Fund. Thank you.
Thanks, Charlene. If I can jump in, I'd really like to add my thanks to not just Charlene, but Betsy, Lynn, Susie, and all of the folks that made this convening possible. As you can tell, there were pretty powerful conversations that happened here. What I'd like to do is share 4 of what I think of as sticky thoughts or sticky ideas to get our conversation as funders started. One of those is a thought that I that I heard at the session. One is a tentative implication that that is mine and mine alone. You can blame me for it. And two are thoughts about what we might do together as funders. What I heard is underscores the revenue sufficiency point that Charlene just made. Access to capital markets is not a barrier for financing sustainable infrastructure as much as adequate revenue to pay for it from the rate base or from consumers is a barrier. Financing right now is available and cheap. In our region here in the Midwest, we have states that have access to the bond market to capitalize SRFs that do not see a need to go there, because even though there are projects on their list to fund, absent some other driver, enforcement activity and so on, the cheap money doesn't matter to the utilities that would use it. What does matter is their inability to raise rates. Whether that's a matter of political will or, if you will, a desire among rate-setting bodies to spend their political capital on things other than water, be it libraries or schools or what have you, or the ability of some distressed communities to pay any more for water and wastewater services, or to a point that was made by the two previous presenters, the ability of those systems to charge for things. And green infrastructure and these sustainable methods of treating water as an integrated whole are very difficult to monetize. And until there's a track record, it's going to be very difficult to bond against it. So the net effect is that this revenue problem squeezes out innovation. And that was the big lesson I took away from this meeting. If we can move to the next slide, a conclusion that I haven't been able to get out of my head is that chasing costs probably isn't going to help us. That is that new and better rate studies are probably not the solution to getting sustainable infrastructure, but rather there have to be new ways and new business models of setting a price for and extracting fees for those ecological services and such that these systems can provide. A cautionary note on this thought, and it's related to it, is that when we talk about decoupling rates from volumetric sales, I'd offer the observation that that's half a solution, that what we need to do, and it goes to some of the last slides Charlene shared with us, is look for new sources of value that customers are willing to pay for and begin to put those product lines in place, whether in utilities or in other services. Next slide, please. As funders, and this is the third thought, we have the opportunity to create conditions for change. I think that we have the opportunity to shape the trajectory that these water utilities or whatever replaces them will become. We can do that in a handful of ways, and I know Scott is going to talk about some of these perhaps in a little more length than I'm going to. But celebrating leadership and amplifying it is one such thing. And whether that's through an awards process or a certification scheme that increases transparency among people that are leaders in the space, or what have you, is a good idea. That certification idea really resonated with leaders in trade organizations and leaders of some of the utilities that we were visiting with at Wingspread. A second category of activities is to really explore these disruptive innovations. That is, find ways to accelerate the development and testing of some new product or service models. Find ways to get ecosystem services, as an example, into more of the mainstream of what these utilities or service districts can provide. Look for opportunities to test value pricing. That is, to create some new products, whether it is insurance on laterals or filtration systems at the point of use, or other things that utilities could deliver and extract not just cost of service out of it, but cost of service plus some ability to retain earnings. And we need to look for opportunities to intervene in the accounting space and to look for what the next frameworks are. How do we consolidate? How do we break down the silos that Betsy showed us? How do we integrate water, wastewater, stormwater, gray water solutions into a thing that is new? And again, a cautionary note on this is we just need to be sensitive about anchoring to best practices. Best practices, as some of my grantees remind me, are code for last practices, and we might be accused of driving in the rearview mirror if we anchor to what worked in the last decade as opposed to what's going to work in the next decade. My last slide, please. In terms of the funding community, and this is something Scott and I talked about while we were at Wingspread, is that the form of support matters. We have plenty of opportunity to do grant making, to support studies, novel interventions, policy work, advocacy, value building, and that kind of thing. But if we drift into looking at business models and piloting transactions, the form of our support begins to matter a lot. The so-called free money, that is grant money, can get in the way of some of those market transactions. So it's we have the chance to bring our full toolkit to bear here, and we need to be thoughtful about how we might do that. You know, before I hand this to Scott, I really welcome questions and conversations, and would encourage you to start typing some of those, and including challenging me on anything that I have said that doesn't resonate with any of you. With that thought, what I'd like to do is invite Scott Miller from the Russell Family Foundation to give us a tour of some of these ideas in a little more depth.
Well, thanks, David. I appreciate it, and thanks again to everybody who's pulled this effort together. It really was a wonderful conference to attend, and I learned as much as I have at a two-day gathering just about anywhere. So, and one of the things that I always try to think about when I ended up leaving one of these conferences so full of thoughts is what can philanthropy actually do to engage in these issues, because they seem so massive and so multifaceted from the beginning. And so with the help of David, we tried to come up with just some possible entry points for foundations to consider. I mean, right now, our level of investment is that we've made a $40,000 grant to Ceres and American Rivers just to keep talking about this. And we think that there is more discussion that needs to happen to really flesh out where potential investment opportunities are. But by the same token, we do want to sort of explore and at least start the conversation about what are some other pathways that would benefit from the kind of support and the kind of tools that that foundations bring to the table. So I'll go through these quickly because many of these have been mentioned already, but they're really, these aren't fleshed out, and they're really just meant to sort of chum the waters for discussion. So the first idea that has been mentioned several times that really did generate a lot of excitement, that certainly the foundation world could play a role in helping to create and launch, is a certification program for utilities, modeled maybe after the LEED program for buildings, maybe something different. But utilities themselves felt like this would be one way to solve some of the problems and remove some of the barriers with their own ratepayers to paying for some of the features of a sustainable utility, and also would recognize, create recognition that would be in some way meaningful on a national basis. So next slide, please. Another aspect of this, and this is the communications geek in me, is that I feel like some of the research that we need to do, that I think Charlene referenced about the pricing dilemma, is how we talk about it, and really how the public looks at rates, and drill down on what I think is commonly perceived by decision makers as an unwillingness to raise rates, at least in a general sense. And so I think we need to understand that better. We need to understand if there are regional differences there. And that's communications research that is expensive but is doable if we decided that it was worth it. Next slide, please. We need, once we have some tools, utilities that are going to go down the road of trying to have a more realistic pricing structure, they need help, not just in the realm of communications, but also in the realm of potential, political advice, potential research. And so working with utilities who can be the first down that road, I think, is something that foundations could do in some ways. Next slide. Supporting pilot projects that help develop ecosystem service markets. As we talked about this, there was a lot of discussion at this conference about the problem of true value not being reflected in a number of different ways. And of course, ecosystem services markets are one way that you can get there. And we talked a lot about the chicken or egg problem, that until you have a market, you don't have value, and until you have a value, you don't have markets. And so getting some ecosystem service markets that are actually some pilot projects that maybe are very small, local in nature, it is something that I think that the foundation community can do in a number of different ways, both through grants and through PRIs. And it's something that we're considering actually here in the Pacific Northwest. We're considering a proposal, for example, from Freshwater Trust, which has done some offset trading on temperature in rivers to see if they can bring that program to Washington State. Next slide. One of the things that you'll hear from people who are involved in this whole value question and in ecosystem service markets is that the problem is not that there aren't willing sellers. There's plenty of people who love to make money off of the ecosystem services they provide, and perhaps even enhance those services. The problem is finding buyers, and that requires a regulatory framework that will make that. That will create those buyers, that will create the demand for these ecosystem service markets. And that's more of a traditional advocacy role, that many of us support that kind of work, and that's something that is going to be key to developing these markets. Next slide. And then investment in the actual programs, again, the grants and PRI. We think that the grants can help with the formation of some of these programs, but at the end of the day, we really need to be able to show the markets, that the larger markets, that ecosystem services markets are someplace you can go make money. And by being early investors, we think that foundations can use their asset base to make that demonstration to the market. Next slide. And then we've got the support. This is something that Charlene referenced, the support for the effort to update FASB and GASB accounting standards. This is something that's actually happening. There's a half a dozen or so utilities that are actively trying to get GASB to reflect the value of things like intact watersheds. Seattle is one of them, San Francisco, Portland, I believe New York is involved. So they can show these as assets on their books. Right now, for example, in Seattle, which owns its watershed, which is largely forested, the trees, because they're not going to be cut by statute, don't count as assets on the books, but the roads that are deteriorating and actually causing water quality problems do count as assets on the books. And so this is something that, again, there is an early effort to get the accounting agencies to correct. It will probably take a few years, but it's certainly something that we could decide to support. Next slide. And then finally, highlighting the work of leading-edge utilities. This is the idea of recognizing champions. We can do that both through publications, online and otherwise, and through things like the Johnson Foundation has done in bringing people together and highlighting the good work so others can learn about it. So those are just a few ideas, and there are many, many more as you start wandering in this landscape, and really just meant to get us all thinking about what are some potential next steps and how we can take this conversation one step further. So So that's, I'll hand it over back to Susie now, and she can kick off our question and answer section.
Yeah, we're going to begin the question and answer period now in the hopes that this can really turn into a conversation. The problem is that we cannot unmute all of you at one time. So what we're going to have to do is when you have a question or something that you'd like to say, simply click the hand icon, and then I will call on you through the webinar, and then you'll be able to ask your question. And if for any reason you don't feel comfortable speaking your question, you can just click the question mark icon, and I'll be happy to say the question for you. And once again, please direct your question or comment to whichever speaker you would like to have address that. So at this time, we'll open the floor for questions. And maybe, Scott, in the interim, if you wouldn't mind going over some of the ideas that you had shared with us internally a few days ago, that might help really start sparking some questions and comments.
You mean in terms of potential next steps? I mean, my overall thought is that, there is no, sort of get right now in terms of a program that somebody could go and invite a proposal for. What needs to happen is for those of us who are interested is to have a further conversation about what makes the most sense for philanthropic involvement. And I think one of the things that we'd like to come away from this call with is a sense of how that's best done. I mean, does it make sense for us to continue? We're funding additional conversations and research with American Rivers and Series. Is it let's wait for the next are there questions that we should be addressing in an additional white paper? Should we be looking at a convening that is more aimed at the philanthropic community? Should we be looking to tee off of meetings, conferences that are coming up in the next 6 months? Should we get some sort of core working group that has a series of phone calls on this? There's a number of different ways to engage, but it really depends on the questions that everybody has and needs to get answered.
This is Lynn Broadus. While we're waiting for a hand to come up, I'm hoping that people aren't as technically challenged as I am in terms of knowing how to raise your hand on the meeting. But if you do want to ask a question, but I'm wondering how some of one of the things we've been hearing a lot about is under different names a kind of infrastructure bank proposal that is being advocated for by some of the big players in Washington, and how that plays into what we're talking about here. And maybe some of the funders on the call have been asked to support efforts with that infrastructure bank. And it's my understanding that most of the infrastructure banks, the various versions of those kind of proposals out there are all in the name of shoring up our water infrastructure, but doing it sort of more of the same of what we have now, rather than trying to ensure that it has a sustainable component or a resiliency component. I'm just wondering if anybody can speak to that. I know we were asked to address our question to a specific presenter. I am not doing that. So I'm wondering if Charlene or Betsy, probably in particular, or maybe David could answer that.
Yeah, well, this is Charlene, and I know Betsy, being in D.C., knows more about where exactly those sorts of proposals or concepts stand before the present Congress. But I think that the fear is that given the perspective of the investment community and given the perspective of many of the people who advocate for water infrastructure in Washington, what that sort of mechanism would end up doing is funneling more low-cost federal dollars toward the same old infrastructure that we've always built. And in effect, what it could do is end up resulting in perhaps even additional supply of the sorts of very energy-intensive, very water-intensive, whatever that might mean for water infrastructure. All water infrastructure is water-intensive. What I mean by that is just it's simply designed to get as much water in the hands of users as possible at the lowest possible cost. So more of the big conveyance systems and all that sort, which ends up putting us in a position further down the road of utilities having to continue to sell more and more water, and those systems potentially not being really resilient to the very real physical impacts and sorts of and responding legal impacts and challenges that many of the systems are facing. And so that's why we think this is a really important and crucial time to be able to reshape expectations about what water infrastructure should look like.
And this is Betsy from American Rivers. Charlene's exactly right. I mean, I think that's the concern about most of the proposals for a national infrastructure bank, which, by the way, is being driven largely, as many of you know, by transportation needs and interests. There's been real engagement by the water utilities in trying to make sure that water infrastructure is part of that conversation. But it really has been in the vein of what Charlene has described. More funding and more access through federal capitalization of such a bank, more access to low-cost, funding from the private sector that has, funding guarantees by the federal government behind it, which makes it, that much more appealing. But the idea is to, through that, draw more money from the private sector. But it's going to be largely focused on repairing and rebuilding and extending our existing systems as they look now. There's been very little discussion, though American Rivers has engaged with sponsors, particularly in the Senate side of the proposals for a national infrastructure bank, to make the case for this. That's sort of very far down the list of their priorities at this time. And then I would say that, as so many things, as is true for so many pieces of legislation or any activity right now in Washington, D.C., its political prospects are dim. Anything that involves new dollars or dollars redirected from other purposes that don't actually cut, the federal spending really have very dim prospects, much less, speaking of the complete political dysfunction for passing any piece of legislation. But I think it's important to continue to engage in the effort that we have here in this conversation in parallel with any of those other kinds of efforts like a national infrastructure bank, which I think will eventually be something that Congress wants to move. It has bipartisan support, whether that's been actively, sort of indicated and communicated or not. It does have bipartisan support. So it's all the more important for this kind of effort and these kinds of messages that we're carrying to get, sort of broader currency.
We do have a few questions that have come in, and the first one, I think, is a general question to everybody, sort of wondering if we can hear a few findings of the focus groups on communications on green infrastructure, mainly on acceptance of and resistance to key concepts, and sort of what are we working with on the ground?
Well, I can talk about the focus groups that were done around Puget Sound, and that is that, I mean, it was a real good news, bad news situation here. And again, some of this may be unique to Puget Sound, and some of it may be more generally applicable. First, the good news. People really did see governments, and in these cases, many of the key utilities here are agencies of government as public utilities, not all of them, certainly. But they did see this role for government in protecting and maintaining water infrastructure. And the regulatory world, it was not something that caused people to run off shrieking into the night, which, is something I think that many decision makers assume that, any new rule is just going to get the public, it's sort of the Tea Party response. And that was not what we saw in focus groups. And the other thing that we saw here is that in a conceptual way, people are willing to pay for things that especially that keep drinking water quality. Obviously, is the thing that resonates with people most, but that protect water resources, as long as they understand, what their money is buying. And there's a real gap that people have in terms of getting excited about green infrastructure, for example, and then as they start thinking about it, saying, well, wait a minute, what does a rain garden really do? What does a green roof really do? Tell me how this is actually, what kind of impact is this actually having? That's one challenge. The bigger, and that's, I think, a fixable challenge, and one that we're really actively considering right now at the Russell Family Foundation. The one that is far more troubling to me is that, and again, these focus groups were constructed across the political spectrum. We had some real conservatives and we had some real progressives and a lot of people in between. And absolutely unanimously, people did not trust government to spend their money, even if they were willing to approve, for example, a rate increase or some sort of user fee to support water quality. And that's a huge problem, because I really do think the willingness is real. I know that when it actually, most polling will show that in concept people support paying for stuff, and then when you say now your bill's going to go up $5, they tend to vote no, and I'm sure that's true here as well. But what you really saw was this sense that, yeah, sure, I support it in concept, but I have no idea. I have no idea what a government or a utility would do with the money if we gave it to them. And I have no confidence that they would spend it wisely or that I would ever figure out what they did with it. That's a real challenge that I think cuts across the entire spectrum of environmental issues, but certainly was one that we heard about in this context.
We have a question from Zoe Rothschild, who's wondering, is there any lead-off research being done on regulatory levers for advocacy? Is this something that has to start at the national level?
Maybe, Betsy, if you could take a stab at that.
Sorry, I'm muted and thought I was unmuted. My technology issues. So let me make sure I understand the question about lead-off research being done on regulatory levers for advocacy. I'm not completely sure that I understand. I want to make sure I understand the question, Zoe, that you're asking.
Sure. We're going to actually unmute Zoe so that she can ask you herself.
Great.
Zoe, you can go ahead.
Can you hear me?
We can.
Yes.
Oh, okay. I didn't know my computer could do this. Just, is there any research already being done? I mean, I think a lot of us fund advocacy and want to know what the opportunities are, and if there's any, what specifically, what levers are there in either the Clean Water Act or, are there any states that have like particular accessibility in the regulatory framework that we can advocate on if we want to fund advocacy?
Well, good question. So the way I would answer your question, and I hope I'm getting to the crux of what you're asking, is, I mean, I think, well, what I would say initially is that advocacy is, incredibly important right now. I think it's kind of like what Scott was just talking about. There's a huge, as there are in many areas, sort of take it for granted problem with clean water, and with our, sort of current regulatory framework, or the kind of clean water protections that are in place that have brought us to where we are, which we've just spent a lot of time talking about the fact that we have to change how we design some of those systems, but the results, the outcomes of what we've done over the past 40 years in terms of protecting clean water have been pretty astonishing. And I think there's, on the part of the public, and even on unfortunately the part of a lot of elected officials, there's a sense of, well, that's all taken care of. It'd be like saying, well, we've taken care of education. We don't have to worry about schooling kids anymore. There's a lack of understanding that you have to continually be vigilant about ensuring that you have the conditions in place that you can continue to have clean, fresh water. And so advocacy around the importance of that is really, really essential. I mean, and certainly right now we are facing, big threats. The bill that's before the House right now, as we term it, the dirty water bill, would include rollbacks the likes of which we've never seen before to the Clean Water Act. So, sorry, I'm putting on my advocacy hat here, but it actually very much relates to this conversation, because if you take away some of the underpinnings of what even allows us to look at using small streams, wetlands, et cetera, as part of the ecosystem services, by taking away their protections and some of the essential sort of baseline clean water protections that we have in place, a lot of the conversation we're having right now about how to even improve our financing and water infrastructure systems is moot. So again, Zoe, I'm not sure I got it exactly the crux of what you were asking, but that's my initial response.
Zoe, there's also, I'm discovering, maybe some state-based opportunities. And again, of course, I know more about here than other places, but I'm guessing that there are analogous situations in other states. As Freshwater Trust, for example, looks to move some of their offset trading programs to Washington, EPA has been in favor of this approach, but the Department of Ecology, because of a lot of bad experiences with mitigation in the past, has been really, really reluctant. And so if we can come to a level of confidence that a particular establishment of an ecosystem services market is real and would benefit in real environmental gains and the establishment of a real functioning market, then there may be work to do on a state level as well in terms of convincing the agency to do what the feds, at least at this point, already would like them to do.
If I can weigh in, this is Dave, and underscore the state opportunities and maybe get Betsy's thought on what I'm about to say as well. I know that some states, again here in the Midwest, have been very, very creative with how they use state revolving fund money to fund non-point source control, wetland restoration, wetland protection, and headwaters protection activities. The state of Ohio in particular has been pretty aggressive at using those funds for things other than simply more pipes, and they have candidly faced some opposition to that from the traditional clientele for those programs, which is some of the folks we're speaking about here. And I wonder, and Betsy, you've thought about this more than I have, if there are state-by-state opportunities to get state agencies and some of the local communities thinking differently about how to use some of these infrastructure funds.
There are. It's a really good point. And we have been involved in this kind of advocacy on the state revolving fund program for over 10 years, both at the federal level and especially at the state level, and very actively engaged in a number of states on that, in Washington and Oregon, in the Mid-Atlantic, in the Great Lakes. And Dave is right. Interestingly enough, those of you that don't know all the minutiae of that program, Ohio has done some really creative things with it. There are some other states, Maryland, New York, Massachusetts, some of the West Coast states that are also doing some pretty innovative things. And my colleague Catherine Baer put together a report following on to the 2 years of the stimulus funding when there was a big new slug of funding into the SRF program, with a mandatory 20% set aside for green infrastructure, water, and energy efficiency projects, which American Rivers pushed very hard for the first time that it had ever been required under the SRF. And a number of states, including the ones I've mentioned, we detail this in our report, Putting Green to Work, which you can find on that website, did a really good job of using that new funding and those mandates as a way to really change their own criteria and the way that they manage their programs. And so we've been continuing to do some advocacy with other states to pick up on what we regard as some of the best programs. And again, that's detailed in the Putting Green to Work report. But I agree. I think that that's a really, there's some very positive models there that we could and should build from. Another point that I would mention is that a number of states have developed or are in the process of developing adaptation plans for climate to look across the suite of activities and financing and funding that they engage in, including some of their regulatory programs, to figure out, how to ensure that those programs are more allowing states and local communities to adapt better to the kinds of extreme shifts that we're going to see under climate change. And again, American Rivers has been involved in several of those state plans, and we have pushed for SRF and financing elements in there. That's another place where I think advocacy, is really valuable.
And next up, we have a question from Catherine Porter. Go ahead, Catherine. Sounds like her microphone isn't working, but that's okay. I have her question right in front of me. Catherine's wondering if there are specific models of innovation that we can replicate. Carpe Diem West just released some case studies of watershed investment programs in the West, and she's wondering if that's useful for others to try to replicate.
And I want to make sure we have time for at least one more question after that, so we should probably try to deal with it succinctly. Does one of our presenters want to answer the question that Susie just shared from Catherine?
Sure. This is Charlene. I'll take a very quick stab at it, and then others can jump in as well. I know that Carpe Diem has been doing quite a lot to try to convene, especially utilities in the West that are looking at ways of financing the restoration and protection of their forested lands and their headwaters. I think that's incredibly important work, and probably I think what it points to, and I think Catherine's question gets to, is there are a lot of experiments being undertaken, sometimes in their own little regional vacuum in a way. And just as we've seen in the energy efficiency and energy efficiency financing space in the U.S., there is really a terrific need, if we're actually going to get there in a reasonable time frame and start deploying capital, to start sharing those stories and the results of those experiments in a much more timely way. I think that is one area, the work that Ceres is undertaking with American Rivers, that's going to be supported by the Russell Family Foundation, is attempting to do that as well, recognizing that a lot of different utilities and systems are wrestling with these same questions and kind of undergoing the same experimentation process. That's a lot of resources that are being deployed that could probably be done more efficiently. So absolutely.
We have time for one more question, and it's from Amy Panic. Go ahead, Amy.
Hi, can you hear me?
Yep.
Okay. So my question is around the role of private companies in this work. I noticed David's slide had a brief comment in there about privatization, and I was wondering how private water companies are engaging on green infrastructure work, and kind of the implications if there is some sort of conversation about promoting greater privatization and what that would mean. I'll just say two things quickly, is that the Park Foundation in general is concerned about water privatization measures, so I'd like to learn more just to get a better sense of where they stand on this. But also, at the same time, our trustees are interested in investing in companies that are doing good things around water, so we're kind of two minds in this in some regards. So any thoughts you have on the role of private companies that are in that realm would be helpful.
Can I take a stab at that quickly?
Sure.
Let me, that comment on the slide, which had solution in I think quotation marks with 3 question marks beside it, that talks about privatization, was really designed to raise the possibility that many cities, frustrated with lack of revenue, that don't have or don't feel that's the place to spend their political capital, turn that into an opportunity to get financial capital by privatizing their services and having the blame for revenue increases, rate increases, fall on the private partner. That's probably not a great pathway or a sustainable pathway. And if there are, ways to shape those transactions for the better, that'd be great. So at least I personally probably share the same concern with some of the privatization that we're seeing. On the other hand, there are a couple of opportunities for private partners in this work, particularly on the provision of some of these decentralized services. I wish Diane were with us to talk about Philadelphia, but the idea that significant new stormwater fees create an opportunity for private decentralized management of runoff is a very interesting situation in Philadelphia. And folks like Ecosystem Capital and NRDC and others are looking at how private firms can enter that space to provide coordinated management of runoff activities or runoff events on private properties that drain to public systems. We're experimenting with that model here too in the Great Lakes, and just very, very interested to see how there can be private services brought in to have the advantage of scale in some of these places. And the other way that private entities can participate is by being capital providers to those private firms or to others. So I think that the specter of privatization is something we should pay attention to, but I also think there are opportunities for private sector players in some of these kind kind of non-monopolistic service models that we talked about earlier.
And I would just add, this is Betsy from American Rivers, that I think that's a great summary that you've just given, Dave. I think it's very complex when we talk about sort of privatization. It brings up all different kinds of ideas and concepts for people. I'll just use one example of a city that I think is doing some really innovative stuff in terms of thinking at a watershed level, really engaging in investing in green infrastructure, thinking more and more in a sort of integrated one water model, although they have a long way to go, and that's Milwaukee. And the Milwaukee Metropolitan Sanitary District, with whom American Rivers has a relationship right now, we actually have a staff person working on the ground, is a system that's publicly owned, but it is actually privately managed. They have a contract with Veolia to manage that system. But I would say, from what I know of that system, and I think this is probably true in a lot of places, that the drive for innovation, the drive for a kind of bigger picture perspective and a more sustainable perspective is coming from the top level of leadership with the utility, from Kevin Schaefer and from the folks who work for him, not necessarily from the company with whom they've contracted to run the system. And I think that that's often the case. So even in a situation where you have a public-private partnership and private management of the system, I think most of the innovation I'm seeing happening at the municipal level anyway, along the lines of what you're asking about, is really being driven by the public sector folks.
Not to get into a conversation about Milwaukee, but this is when, living here, I actually see it kind of differently. And but I think that what this points out is that there's it's a ripe area for discussion of what is the role of the private sector versus the public sector, and if things are going to be privatized, how do you incentivize the public interest when a private entity is leading the way? And it's really been kind of interesting here in Milwaukee to see where the public utility does not always have the public's interest in mind, and which is a little counterintuitive. So, but I think that's where the interesting part of the conversation can be. And so I'm not, but I think that Amy's question is a fascinating one, and maybe it's a perfect segue into the wrap-up, because it seems like the kind of thing that would be worthy of either further conversation or study or inquiry in some way. So I think maybe I'll turn back over to David and Scott at that point. And Catherine would have been involved in this portion where she's still technologically challenged out there, but so.
We're pulling for you, Catherine. You're listening. Well, I think one of the things that we didn't want to leave without, I'll just jump in here and go for it, is to get some sense from you as to, again, what kind of venue should this conversation continue? What's the most useful? We've kicked around a couple of questions. The write-up from the meeting is very, very worth reading, and it probably will prompt some more. Others will come up as you think about it. It's one of these, this whole issue of structure and finance of utilities is one that is, I think, emerging. And we'd love to hear from you in some kind of way how to follow up with you and what makes the most sense given the other work that you're doing. And again, there's a number of options there, but that I outlined before. But anybody who has any thoughts on that, or anybody has any thoughts about how we can determine that would be really welcome.
And what I'll do actually, Scott, is tomorrow I'm going to be sending out a survey to all of the participants, and I'll include a question about that so that when folks have feedback on that, they can drop it right in the survey.
If you want to get some conversation going now, but we can certainly also capture it.
Does anybody have any thoughts about something that you'd like to see happen in the next 6 months, let's say?
They'd have to raise their hand or submit a question so that we are not seeing any questions come up right now.
I'm thinking that just because of the nature of this technology that we're using right now, it's really hard to have a conversation. And so I think what we should maybe do is really wrap up for today. And we can use the survey as our tool for getting everybody's feedback, and we can use that to invite further conversation in a different type of a technological venue where we can actually all speak with one another.
And I think with that, unless I see a burning question pop up, which I don't, I think what we should do is say thank you very much to our presenters, both for the work that they've done. I mean, this is the proverbial tip to the iceberg. There's been so much work that has gone into the development of this meeting and bringing the people together, and then the report that we hope will be finalized December 1st, and we'll be able to get it out to you at that point in time. But for those of you who are interested in continuing to chew on some of these pieces or think about your funding relative to some of the perspectives that have been shared, then we look forward to working with you as partners moving forward. So if I could get the organizers to stay on the line for about 3 more minutes, but while we let everybody else hang up, and would like to just touch base with the organizers for a few more minutes. Thank you.